Hello and welcome to the Business Standard Banking Show. Private sector lender Yes Bank got a fresh lease of life 2 years back, with State Bank of India picking up a stake of 30%. A new board was formed along with a new CEO. In the financial year 2022, the bank reported profit for the full year after incurring loss for the past 2 years. To discuss the future roadmap of the bank, we have Prashant Kumar, MD and CEO Yes Bank. Mr. Kumar, welcome to the show. And congratulations for being appointed for another 3 years, which is of course subject to approvals.
Yeah, thank you.
So let me start with asking you, after you took charge of Yes Bank in March 2022, last 2 years you have focused steadying the bank. There has been an improvement in several parameters like CASA ratio, margins, credit cost, and asset quality. A new board will also be formed after replacing some of the existing board members. What is the roadmap now going ahead?
So, Manojit, like what you have rightly said, that very first year was in terms of steadying the ship, because after March 2020, along with the bank was put under moratorium in the initially March 2020, and then subsequent because of the COVID impact also. I think we need to make a lot of changes in our own internal processes, governance, risk management. And after doing all those parts, I think the FY22 was something where we have grown into the business and also in terms of making the profit. So FY22 was the first full year profit, and it was more than 1,000 crores. So I think last year we have seen the growth in the business, both in terms of deposit, loans, and also in terms of making the good recoveries from our stress asset pool. After achieving those objectives, now we are coming out from the reconstruction scheme with the formation of alternate board on the 15th of July. And this year, this financial year, and years going ahead, the focus is more in terms of business growth and also in terms of improving the profitability. And I would be saying the contributor for this would be a loan growth of around, say, 15%, minimum 15% loan growth, which would be largely contributed from the retail and MSME and the medium enterprise to the extent of around, say, 25%. And on the large corporate, on the, say, around 10%. And this loan growth would be supported by a deposit growth, where the CASA mix is something which we are focusing, because that would also give us a lot of advantage on the funding, the cost of the funding, which we would like to pass on to our customers on the lending side.
Correct.
So I think this is something which we are doing. Last 2 years, we have been able to make a recovery and the resolution of around 13,000 crores from our stress asset pool. And I think this journey would continue in the current financial year also, where we are absolutely sure in terms of making a recovery and the resolution of at least 5,000 crores. Okay, so this is I think what we are planning. But I think the most important part is we are very strong on our digital capabilities. In fact, today every third digital transaction of the country is being supported by Yes Bank infrastructure.
I see.
Okay, so it means basically it's almost every month we are handling almost 2.5 billion transactions, digital transaction every month, which translates into almost 4.5 trillion Indian rupees every month.
Now coming to another important aspect, which is asset quality. While asset quality has improved, the stock of gross NPA remains large, about 14%. Reducing that number would also depend on how quickly you set up the proposed asset reconstruction company, which seems got delayed. Earlier, I think you said that by June the transfer could happen, but it did not. Can you throw some light when you plan to set up the ARC and the transfer of assets?
No, I would agree with you in terms of that people feel there have been delays in setting up this ARC. But at the same time, I would request each one of you in terms of appreciating that this would be a very, very large transaction, where stress asset pool of something around 50,000 crores. The second part, this is the first time. This is the first time in the industry. So this is also something which is unknown for us. Okay. And when you are entering into a partnership with the foreign players, definitely the partners would also like to ensure that their interests remain protected over a period of time.
Correct.
So I think for both the partners, this is something new. We are trying to resolve all the issues. And today, like we are in situation like on day one, you can't anticipate all kind of issues which can come up. Okay. So every day when you move forward, you always find some issues which you need to resolve. And that is exactly what we are trying to do. It is taking some time, but we are quite hopeful and confident that we would be able to do this part very soon.
Right. Sir, the earlier plan was to sell 50,000 crore of NPA. That's still on.
That is still on, and we would be actually trying to dispose of all the stress asset pool, both on the wholesale banking and also on the retail side.
I was coming to that. So you will become a zero NPA bank. Is that correct?
Yeah, exactly.
Coming to ROAs, the bank has guided for a 75 bips ROAs for FY23. According to some analysts, the projections appears optimistic because to achieve such a target, growth needs to pick up. How confident are you on the growth front and reaching the ROA targets?
No, I think the ROA guidance which we have given for 75 basis point, we are absolutely confident in terms of achieving that. Rather, we would be inching towards our target of 1% ROA in the current financial year itself. Let's see if we are not able to do it. Definitely next year it will be done. But 75 basis point is something which we are fully confident. And why we are confident? Last year also, during the difficult times, we were able to grow 27% on the retail and MSME. There has been a growth of more than 30% on the medium enterprise. But overall loan growth was around 9%. And the reason was that on the large corporate, there were two things which happened. One thing is that all the large corporate last financial year, they were also leveraging their balance sheet and repaying to the banks. The second thing, as a bank also, our strategy was also to reduce our large exposures. Okay. So it was more of a debulking and de-risking some of the portfolio, which has been done now. But if you see the disbursement, last year we have disbursed almost 70,000 crores of loan. Okay. So the current year, that kind of disbursement, that kind of growth would definitely happen. And it would result into a loan growth of at least 15%. We are fully confident. And similarly, on the reducing the funding cost, we are continuously improving our CASA ratio. This bank used to open, even in the best of the times, say every month something around 35,000 new saving bank accounts. Okay. Today, I think this would be the 5th month where we are continuously opening more than 1 lakh saving bank accounts every month. Every month. So we are adding, actually, if you see, more than 1 lakh new customer to us, who also give us a lot of opportunities in terms of reducing the funding cost, but also do a cross-sell of our loan products and the fee-based product.
I mean, so far as credit uptick is concerned, have you seen the healthy credit pickup in the first quarter of the current financial year?
So I think fortunately, though the interest rate has gone up twice in this quarter, but I think we are not seeing any negative impact on the demand, either on the retail or MSME, medium enterprise, or even large corporate. Okay, so I think that is important. So in this quarter, we have not seen any negative impact. Rather, I would be saying the first quarter used to be always very, very weak quarter.
Right.
But I think we are seeing a good demand. We have seen a good demand in the first quarter. The only thing would be we need to be very, very cautious in the future in terms of how, if there is any further increase in the rates, which everybody is expecting, how it is going to impact the demand. That we need to be watchful. And we also need to be watchful in terms of how the rising interest rate scenario would impact the credit quality. In terms of credit quality in terms of capacity of the borrowers to repay you. So I think as a bank, we would be very cautious. We would be very careful in terms of growing our books. And definitely we would not like to take any undue risk.
Your net interest margin improved in the fourth quarter to 2.5%, mainly due to reduction in cost of deposits. How will the margins pan out in a rising interest rate scenario?
I think in the short term, there is always a upside for the bank whenever rate of interest goes up. But definitely for us, the advantage is that today we are having a CASA ratio of 31%.
Yes.
And there is a huge opportunity for us to improve it to 40% over a period of time. So I think that is something which we are continuously working. And I was sharing with you that we are opening more than 1 lakh saving bank account every month. I think what we are expecting that in the current situation, we would be definitely able to exit the FY23 with NIMs of around 3%.
Have you decided what kind of route you want to take in raising these funds?
So it is not 1,000 crores. I think what we have said that we would be raising capital, okay, to create a buffer, which would increase our CET ratio from the current 11.5 to around 13.5 to 14.
Yes.
And that would require something around 7,500 crores kind of thing. Okay, so I think this is something. And today, if you see the market conditions are not very conducive for a capital raise.
Correct.
Today our CET ratio is absolutely adequate to take care of our growth requirement. Okay, so we are not desperate, but definitely during the current financial year, we would be looking to raise capital to the extent of $1 billion kind of thing. Okay, which would be something $1 billion type of thing. And depending on the circumstances, the overall economic scenario, I think at the right time we would be raising. No, I think we are exploring all the options, but at this point of time, I think it is important to have some partners who come with the equity who are good names. I think because that would also give a lot of comfort to the existing investor.
Right.
So I think we would be looking to explore all these options where we don't have the capital only, but we have some good creditable names on the capital side.
Like the private equity players?
They could be one. They could be the private equity, the sovereign funds.
Thank you for speaking to Business Standard. It was a pleasure talking to you, sir.
Thank you so much. Thank you so much.
Thank you, sir.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.